All right. Good morning, everybody. Jack's back in the saddle. Adam's ready to rock and roll. And as you guys are loading onto this one, just remember Q&A button for questions. You can harass us on the chat. We've got a lot of stuff to cover, and some of it is there will probably be some rants coming on, I would imagine. And I also want, before we do that, kind of like what we do with our coaching in our L10 meetings, we start with the segue. So the segue is always something about like, hey, what's something positive? So I'm wearing this culture t-shirt from Movement Mortgage. Thank you, Casey Crawford, and thank you, Jonathan Romero. I refinanced my house I just refinanced it through them. I bought the house and they were my mortgage provider 6 years ago when I bought this house. And it is an amazing process that they do, but even more importantly, through Movement School, Movement Center, Movement Foundation, they are doing some amazing things in Charlotte, North Carolina that I wish our government would pay attention to what the private sector can do and is doing in this city. So anyway, thank you again, Casey. Thank you, Jonathan Romero. I'm passing it to you, Adam, and try not to go super negative.
Thank you, Gary. I'll start off with just, the sheer lunacy of the North Carolina General Assembly, not doing something about the deductibility of PPP expenses. So in the great state of North Carolina, we are now down to one of around 18 or 19 states left that haven't done anything. And it looks like we don't plan to, from all the indications that we're seeing about fixing the deductibility. And that's because the rumor is that we're all worried about a $600 million revenue shortfall coming in that, some have equated to, we'll take the $300 checks that the governor sent out times the number of residents in North Carolina. And that's why we have a revenue shortfall. So therefore, if we weren't dipping into a rainy day fund, I don't know what's a rainy day. But independent of that, it just, it doesn't look like there's going to be a lot forthcoming unless for some reason in North Carolina, they wake up to the fact that, hey, this new stimulus package has a lot of state aid embedded in it. And maybe that could the two could somehow offset each other. So again, no relief in sight for North Carolina business owners yet from the North Carolina General Assembly. One positive note, well, it's not even a positive note. From a timing perspective, I was talking to a colleague the other day about, North Carolina was really late to the game in terms of providing any type of guidance or relief on, when to make your tax payments and all that stuff last year when the pandemic started. Most of the states had issued guidance, early out of the gate, kind of March, April timeframe. North Carolina took until May to get all their final guidance out. So on a positive note, there's a chance that, maybe they'll do something after April 15th that's retroactive. We'll see. But, on to the, what's it called, Jack? Is it the American, I forget what the actual name is, the American Rescue Plan.
Act.
Yeah, the American Rescue Act. So there's been a lot of ballyhoo about, hey, there's nothing in this about rescuing America. I'm not, the bill is pretty long, or the law is pretty long. I skimmed it today for the salient points were relevant for us. And I thought, well, what is all this ballyhoo that other people are talking about? Yeah, there are some specific shout outs, like why Howard University is, called out specifically and given money specifically, and other schools aren't. Your guess is as good as mine. Why that made good sense. But the positive side is all of that stuff is relatively de minimis relative to the overall legislation. And, while Jack and I have been, pretty dogmatic about the fact that, this stimulus package appears to be predominantly geared towards individuals and families, and that's still true because there are a lot of provisions around the direct stimulus checks and the child tax credit, and some other nuggets about the ACA rebate that you can get on the healthcare exchange. There are some hidden business jewels that are sitting in here. So I'll just do, a quick little recap before turning it over to Jack. The first one is, a lot of our clients are landlords. And that, that's not really their primary business, but it's their side business. And, there's a lot of frustration that, hey, the renter's getting a bailout, but I'm not, unless I happen to have a HUD back mortgage, unless you maybe got an EIDL loan. So in this, there is direct rent grants to catch up rent, current and in arrears. So I guess that's an indirect way of saying, hey, there's going to be some landlord relief in here in terms of people having the ability to apply for grants to pay back rent. And somebody's invariably going to ask, well, how do I do all that? We don't know any of that. The next one is, a lot of the state and local governments had money to dole out that were from the federal government to help out, so that those programs were recharged. So presumably, city of Charlotte, Mecklenburg County, state of North Carolina, there'll be some money that flows out related to this. The FSCRA credit, which is the, hey, I got the Rona, I'm going to be in sick today, credit was expanded to September 30th. They also changed a little bit of the qualifying criteria, not businesses that would qualify, but rather, make it a little bit easier to claim the credit. Also, and this one's actually really good news, is the employee retention tax credit was expanded to 1231. The amount of the credit was expanded that you can take. And I think even more importantly is, there's been a real crappy consequence of deciding to start a business in 2020. I will remind everybody that I started BGW the year that the recession happened. But a crappy consequence of starting a business and all this is that you didn't qualify for any aid because you didn't have any comparison points, really. So this legislation fixes that by allowing startups to take the employee retention tax credit. If in the quarter, basically, if overall their annualized sales were less than $1 million. So they reference code section 448, which in code section 448 basically says, look, if you don't have the full year to calculate, take what you got and annualize it. So if you're open for 2 quarters, you basically would multiply that times 2, and that's your test against $1 million. So I think that actually is, it would have been great if they would have said, hey, there's, PPP loans available for people who aren't fraudsters. That would have been even better. But this is kind of a good second best. And then really, the last one I was going to hit on is, because I want to say Jack can have the thunder for restaurants. The last one I'll hit on is, this doesn't necessarily impact employers other than you need to administer it, is that the government's going to pick up the tab for COBRA payments. So, if you end up having somebody go on COBRA, the government's supposed to provide a subsidy for that, which, I didn't read the full text, but, presumably, you're supposed to pass on either you're going to get it and you pass it back on to the employee, or you just never collect the COBRA premium from the employee. It's unclear exactly how that's going to work, but basically the government's picking up the tab on COBRA payments.
My turn.
Sorry about the back.
You're up, Jack.
All right. Well, first, I want to share with you a couple conversations that I've had over the past 2 weeks with was able to reach out to the White House and have a chat with the president. And basically, first, there were two conversations. First conversation was, Mr. President, with all due respect, I have this program that I'm doing with some friends on Thursdays, and Wednesday kind of rolls around and don't have really a whole lot new to share with them. So it'd be really awesome if you would get your crew together and get it done. And that way I have something to talk about. And, we have a good attendance rate, and it'd be helpful for citizens of the country, kind of thing. So that didn't work. So my second conversation was, got him on the phone. I'm like, yo, Joey Bag of Donuts, how you doing? I got a thing going on here on Thursdays, and I need you to do your thing so I can do my thing. And so I would really appreciate it when they put that thing in front of you, you pick up your pen and you sign the thing so I can do my thing. Capiche? And so here's where we're at. So hopefully we get to move forward on some stuff. I'm not aware that he actually has put pen to paper as of last night. So, but a couple of things to keep in mind. The priority, the 2-week priority that was for smaller businesses, I think ended 2 days ago. I think it was the 9th was the deadline. A couple of statistics that I throw out there typically is for you guys is through March 7th, 2.4 million PPP loans totaling $165 billion, which is a big number, but statistically, it's only 58% of the 284 billion that's been allocated, roughly 284. That number changes. And interestingly, okay. The March 31st date has not been extended yet. It's only the 11th. So there's hope that here's a Jack theory is that why extend something if you can get people to do what they're supposed to do and get a lot of the stuff into the system? And why wouldn't you do that? Why would you open up the relief valve now when you still have a little bit of time to get people's anxiety to be in compliance? So there is discussion, and I think amongst various industries, the accounting industry, legal industry, franchise industry, to try to extend that for at least 60 days for a number of legitimate reasons. As you know, we've talked about that the system is not quite the electronic system is not quite working correctly. So on technicalities, it's spitting back errors that the bankers have to deal with and that you guys as owners have to deal with. So, to get a little bit more into the detail, what's happening is they've built this system or revised the system to check for fraud so that they don't have the problems that they did with PPP1, which is people filing and they shouldn't be getting the money to begin with, or they have improperly filed for forgiveness. And so they are using various databases. They're checking to make sure they're using Dun & Bradstreet. They're using state and federal databases to cross-check to make sure that your businesses are legit when you go through this process. And it's really kind of bogging down the system. Another thing to talk about, and we've brought the employee retention credit back into the mix and the discussion of things, that it's really important, and they've modified and clarified that there is interaction between the two, that they're not mutually exclusive. And the challenge is that because you can also claim the retention credit even if you have received the PPP loans, there's still a lot of misunderstanding as to the ability to be able to do that. So, please look into that and see what don't forget about it, because apparently there are a lot of people, a lot of businesses that are not taking advantage of both. And then a misconception, there has been extension of some loans, or the ability for banks to fund some loans to June 30th, but it's limited to, and it's called the Paycheck Protection Program Liquidity Facility. And it's for non-depository institutions, which essentially means community development financial institutions and non-bank SBA lenders. So I've had questions that, hey, I heard that it's been extended. It hasn't been extended past March 31st. I think it will, but it hasn't officially happened yet. So those are my highlights. Oh, and then the restaurant, pull up those numbers to make sure I don't mess that up. But 28.6 billion for new restaurant relief in the form of the grant program, 5 billion set aside for restaurants with less than $500,000 in 2019 revenue. And there's other stuff that is potentially going to launch that is related to businesses, but that's still in discussion in limbo. But those are higher dollar amounts, $5 million, $10 million. Businesses that have, I think, less than 20 locations. So again, there's parameters and restrictions that are still being worked out, but you know, there is a significant chunk that is allocated to restaurants. So that's my quick summary for the week and my little story about my calls with the White House.
That was very entertaining. So it's good to know that somebody's got a hotline to that guy. So
I think I may have exhausted my ability to get into after the whole Joey Bag of Donuts.
the Joey Bag of Donuts may come back to haunt you.
Yes.
Because this is going to live forever out there in the internet. But so one other quick shout out before you guys hit us with questions. This is to our U.S. Congressman, Dan Bishop. He actually has called me back and we've had another chat early this morning. And I just put in the chat a link from his aide, and they sent a bunch of links, but that one probably gives the most thorough, if you want to call it that. It's a 16-page summary. But here's the interesting thing, and I'll actually include another link that has how the breakdown by states. $5.2 billion is coming back into the state of North Carolina from this American Recovery Act. Well, if there's a $600 million shortfall and they're getting $5.2 billion infused, he even said this morning, you know, I suppose they could use some of that money to address the shortfall because, as you know, the states can't print money unlike the federal government. So what I would encourage, and he said that because the business owners like you and me and everybody else on this call has done, they kind of lit up Congress and said, hey, you know, make sure that this stuff is deductible. And they heard you, they heard us, and they made it so at the federal level. He said the best thing that we can do is just light up our local congressmen in the state of North Carolina and ask them to do the same.
Yeah,
So,
I think.
Go ahead.
Oh, I was going to say, sorry about that, Gary. That I think related to that, you know, I have been actually pretty disappointed in all the chambers of commerce for not. I mean, the U.S. Chamber did a fabulous job of lighting this issue up at the federal level, as did most every lobbying organization. Yet we've really had crickets, as far as I know, from the Charlotte Business Alliance. You know, I love the Lake Norman Chamber. I got started there, but even Bill's been crickets. So, yet this is the definition of advocacy. Like, if you want to be relevant, it's your time to shine. So even if you don't know your representative or senator, but you do know people at your respective chambers, light them up and get them moving, because they have a really loud voice when they want to have one.
Yeah, I just put that link on the state and local allocation in there. So Phil, I know that you're on here. I haven't checked the roster yet, but I sent you the link, so I'm assuming you're on here. I know he had some questions, so feel free, anybody that's got a question specifically, whether it be about that or there are still questions about PPP, like, hey, you know, should I go 24 weeks? Should I go 8 weeks? I mean, I heard that even this morning again. hit us up on this. This is a place to do that. And it's, you got a couple experts, bad impressions, but he is a good lawyer. And so hit us up and you can do it for free. So anyway, and I'm also going to check into a couple questions that had come in. So hold on here.
While you're doing that, why don't we bring up a topic that we talked about, but not recently, which is wait or go on the forgiveness. And it's, the more that I read, the kind of the message is the same, which is if you have maximized what you're going to get, then okay, maybe you should go ahead. But there's just so many, and keep in mind that what we're getting, yes, we're getting stuff from Congress and from Treasury and SBA, but a lot of the implementation, some of the implementation are interim rules, so they're not even final rules. And as we saw with round one, even though we're all crossing our fingers that they're getting it more right this time, that there's still going to be implementation questions and clarifications, et cetera, and stuff. So if you believe that there is something more to gain by waiting, and even if it's just like, well, maybe not, but if it's not, again, from my perspective, if it's not a definite, there's no other configuration, nothing that they can do that's going to impact my maximizing my ability to get money from the federal government, then maybe that's a good time to proceed forward. But there's still just a lot of interpretation to occur. So, and I don't know how you guys feel about that. If it's changed, I mean, that was kind of our suggestions months ago, and I don't know if that's changed from your perspectives or any exceptions to that kind of general advice.
No, I mean, I think it's, a lot of banks have not actually even allowed for the submission process. So, I think from our perspective, it's more around, look, at least have your crap together, at a minimum that versus going through a fire drill at the last minute.
So speaking of that, the question that I was looking for that came in last night was with regard to documentation on supporting information for expenses such as leases, rents, utilities, benefits, etc. So the question was, for these expenses, can you confirm what we would need to supply, including a copy of invoice, canceled check, front and back, or other payment methods such as credit card receipts, statements, or direct payments from our bank accounts?
Well, a lot of that depends on the loan size. So if it's below $2 million, the bank may request it, but it's not required. However, you're supposed to retain information. And in terms of retaining information, you kind of think about the classic, three-way match in accounting. I had a PO, I had a bill, and I actually had a payment. In this case, I have a lease, I have a bill, and I have a payment would be the equivalent of your three-way match. So I think, having something that demonstrates that the expense was real and legitimate, I would have that available. And, I think most businesses, below the or above kind of the $1 million, $2 million in revenue are going to have, that form of record keeping just as their natural, course of business. So I think my recommendation would be, just as part of your forgiveness application folder, just if you put down, $40,000 on the rent number related to your other bucket of expenses, my folder would have the lease agreement, the bank statements that show the cash coming out of your account that corresponds to the rent payment back of the receipts. And if your landlord sends you a bill, I'd have those in there too. would be my recommendation in terms of buttoning up, making sure you got the documentation available, because it's below $2 million, even though you don't have to provide support. It does say that the government can ask, at some point. So I can't remember what the records retention requirement was, but I think it was like 7 years off the top of my head. So that's why I would have it in the file ready to go.
Yeah, and this one I do know was above 2 million, so they are going to be under the heat lamp for sure.
Yeah.
All right, good. Got a question in here from Andy. I received PPP2 funding, have decided to use it strictly for payroll. I'm doing it for 12 weeks because that works out to the amount I'm used to making. Is that okay? Suggested or not suggested?
Not suggested. Well, I mean, the reason for that is that, if you, let's say you got, keep the math simple. You got $100,000 in PPP funding. And if to meet the intent of the law, 60's got to be for payroll, 40's got to be for other expenses at your minimum requirement. Thus, if you just say, I'm going to take the lazy route, use 100%. When I say lazy, I don't mean to imply that you're lazy, but take the route of, I've got enough payroll to cover it. I don't need to worry about all that nonsense that guy just said about saving off my lease agreement. Bill, I'm just going to use straight up payroll. It's easy. I'm going to show the 941s, period. Done. Well, what you're leaving on the table at that point is the ability to do these other tax credits, like the employee retention tax credit, because you can use those in parallel for labor expenses that otherwise wasn't covered by PPP. So I just think, depending on the facts and circumstances, it's possible that you're leaving some tax credit money on the table by not using the other expenses to reduce the amount of payroll that you need to get to your full recovery. So using like BGW as an example, we could have used 100% for payroll, but we still had rent. We still had all these other expenses, and that told, I don't remember off the top of my head, but I think our split was like 80-20, just as a natural course of what we did, because we just didn't have enough other stuff to get to the 60-40 ratio. But if we'd have been 60-40, I'd have gone in at that, because I would have wanted to preserve the ability to claim the tax credit.
All right, good. Have you guys heard of many PPP loans that have not been forgiven? I've heard of 0 so far, but I'm a data point of 1. Jack?
So I not that they haven't been forgiven, but maybe some challenges. For example, represent a multi-unit, multi-concept franchise. And actually, even though they're sort of a franchisee, they're really a licensee, and they were looking for the SBA registry number, and they're not going to find it because it doesn't exist. And then so we worked it out with the banker, because they were, following the form, and it's like, well, the form says that you have to put it in here, and then reached out to the general counsel for that concept, and she said she'd be happy to write a letter, but it worked out. So more technicalities and maybe some hurdles, but not a flat out denial, because I think, again, Jack theory, because the banks, at least they feel comfortable that they're covered, because the responsibility for truthfulness and lack of fraud is on the borrower who is providing certifications, and the bank is really just a pass through. So they have their get out of jail free cards, so long as they don't bury their head in the sand with an obvious fraud. I mean, they still have some things they need to do as they're processing it, but they can rely upon the algorithms created in the system that they're putting through. And that's why, again, it goes back to, well, people are having problems on these issues because the banks are just following the algorithms, but they can't fix the algorithm. So they have to find a way to deal with it when these error codes are spit out, when there really aren't errors. It's a problem with the processing setup.
Yeah, I haven't seen any issues on the forgiveness side. I've only seen issues on, to kind of Jack's point, it's slightly outside of the box. And the two examples that we've had are, one, a business that bought another business. And, the ship sailed back in June with one of the FAQs that, look, if you acquired a business, you still qualify as if you had owned that business during the full time frame, even if it was an asset sale. So the bank said, no, you don't qualify. I'm like, oh, now I'm just going to get irate. So cut and paste the FAQ. Yes, you do. That was one. I think the other one is that, we have a lot of clients that for administrative reasons effectively act as their own PEO. So, I've got 40 locations that are all separate LLCs, and I've got all the employees in one spot acting as leased labor. Well, in the original applications for administrative ease, they applied under the PEO, where if they had truly done it correctly in hindsight, they would have applied as each standalone entity, no different than had they outsourced their payroll completely to ADP as a PEO or Paychex or whoever. So when they went to go reapply again, they had some locations that were doing fine, other locations that weren't. So they only wanted to apply for the locations that were doing bad. And the bank was like, well, no, because overall you're collectively doing good. It's like, well, look, that's kind of a form versus substance, discussion that we're having here, because you didn't process the application right in PPP round one in the first place due to the absence of rules that existed. So, we've had those kind of hurdles that just, it takes a conversation with the bank to get them, even though I'm with Jack. It's like, even though they technically have no risk, it's like they're still operating as if, oh my God, the Fed's going to screw us.
Mm-hmm.
Well, I mean, I don't blame them, but it's like, it's seriously like, not, Gary, don't get mad at me. Somebody will yell about this, but it literally is like QAnon for the banking industry. Like I read on some internet chat board somewhere that, there's a regulator drinking the blood of children. Jack's laughing. You can't see him. Come on. That was pretty funny.
So, hey, I'm going to go back to a question that you had answered. So this was for Andy, where you had talked about the 100% versus 80-20 versus 60-40. Does this make any difference where Andy is the only employee?
I haven't had the situation where you get to apply for the tax credit for your own wages, but I would think it wouldn't make a difference. The concept's still the same. Just haven't had that circumstance yet.
All right. So next question. This is from Phil. What's the benefit of using 24 weeks versus 8 weeks for forgiveness?
The only reason for the 24-week period really was if you're going to have a problem having spent the money in the 8-week period. And that's why they did it, is because people were stalling getting up and running and ramping up. If you think about a restaurant or a hotel, like that's classic exhibit A. So they granted the 24 weeks to accommodate for the fact that some people had a slower ramp up. But if you spent the money in 8 weeks, I don't know why you wouldn't use 8 weeks.
Okay. What I have heard was, the one consideration to think about is 24-week period is easier just because there's more payroll costs to work with. So
what's that? Oh, yeah.
There's just more payroll costs to work with in a 24-week period of time. But all right, hopefully that helps. This is a little follow on while we've been talking about Andy. They elected as an S Corp. Do you know if that would qualify?
Yeah, there's no reason not.
I mean, you're basically saying that because there's a few assumptions that are in there. S Corp, that you are a W-2 employee of your own entity, treating yourself as an employee, making, and getting the calculations right. I shouldn't say calculations because there's no bright line calculation of what is ordinary income versus capital gains on the net income distributed to you as the sole owner of the entity. So, all those assumptions, I mean, if you're treated as an employee for all other purposes, then yeah, I agree with Adam that I don't see why that would be a problem for this in this particular instance. Said another way, I'm not aware of anything that would prohibit a single owner S Corp shareholder who is also a W-2 employee of that own entity to be able to take advantage of this.
All right. Andy says, yes, exactly. Thank you. So, all right. Awesome.
Well,
all right.
except when the moon's full and the planets are in alignment, then they did pass a law that doesn't qualify. I'm just kidding.
Yeah, it's an amendment that's somewhere in that 8,000 page document.
643 pages. We were told
okay,
several
sorry.
times about the requirement to read it out loud.
At this point, we could say whatever we want because between your comment and my comments, the Secret Service is coming after us anyway. So
there you go.
We're all good.
We've made no threats.
Yeah.
Let the record be clear. No threats have been made. All right. So here's the question. When it comes to calculating average FTEs, do we have to use hours during the covered period only, or can we line up the hours with our payroll info? For example, if our covered period started April 17, we paid employees on April 22nd for the weeks of April 6th and April 13. Can we use those hours from April 6th and 13 in our FTE calculation, or do we have to calculate hours starting on April 17 exactly?
I believe the hours are associated with the covered period and don't apply for the alternative covered period. But I mean, this is kind of implying that you're kind of close on this anyway. And I think what we've seen with the FTE calculation is that, my favorite example of this, it's actually one of the biggest loans that any of our clients had. In his mind, he felt like, hey, I kind of thought that my head count went down, but in reality, his head count went up because of this also applied to a lot of staffing companies because of the partial FTE safe harbor, meaning that anybody below 0.5 is 0.5. So if you had a 0.2, that's 0.5 if you like the safe harbor method of calculating your FTEs. So before I got all hung up on, is it this day or this day? Because that sounds like you're getting really precise in the calculation. I just would look at the safe harbor method. But I believe, if the intent was, hey, this applies to people associated with the covered period, then it would be the hours worked during the covered period that you elected, regardless of which payrolls you used. Like the classic example would be, hey, one of the payrolls that I used in the cover period was for time worked 2 weeks before. You wouldn't include that, to my knowledge. You're only including the hours worked during the actual cover period, even though there's a payroll in there that was paid in the cover period that had hours worked from before. And you could equally have a payroll that was included that was paid after the period for hours that were worked in it. Those hours would count. But look at the safe harbor calculation.
Jack, you confirm or refute?
That's a math problem and like with a bunch of dates. No, I'm kidding. Yeah, kind of same. I mean, I followed kind of the numbers, but my suggestion is to go through the calculations and see where you end up, because it sounds like that there is, the numbers would be close on the calculations, and going through it and see, not that, a small mistake, no harm, no foul, but I mean, it's just, yeah, I would want to have the worksheet in front of me and run through the calculations as a point of comparison between the various scenarios.
I would think that also, depending upon who your banker is, you would want to have those conversations with them too, because at the end of the day, they're given the nod, and more of a conversation and dialogue, I think, the better. And the smaller banks in particular, the bankers seem to be a little bit more in tune. It's a blanket statement, but all right. Hey, Robert is on here. I am not surprised. It's good to see you here, Robert. Have you heard if the SBA is going to change the rules to where independent contractors can amend their prior PPP submissions to capitalize on the new gross income calculation? At this point, proactive business owners are being penalized compared to those who drug their feet.
I have not heard anything yet on that, but I'll also admit it's because I have not reactively seen it appear in my inbox. I haven't actually searched for it either, but there's been nothing that I've heard of in the research that I did related to this.
Yeah, that's a great question. And I don't know the answer to that. I probably should, but I mean, so allowing, we've kind of said that PPP 1, PPP 2, and there's no going back. But this is an interesting question because it is kind of, the unfairness that you've articulated may push them into saying, well, this is what we meant to do. But I would say likely not, only because many of the Band-Aids or the corrections are prospective rather than retroactive in many cases between 1 and 2, program 1 and program 2. So my best guess is probably not, but while we're talking, I'll see if I can find the actual answer to that.
Okay, cool. Well, it's interesting because a couple conversations that I've had this week where people were asking, well, gosh, should we do an extension on our tax in case North Carolina changes course and follows suit with South Carolina, their neighbors and our neighbors, but in this case, it was a business owner that had a neighbor down in South Carolina where, hey, it's following the federal guidelines and federal rules, but North Carolina hasn't yet. Now, again, are we holding our breath that North Carolina will get its act together? Not necessarily, but it sounds to me like, they are still wrangling with it a little bit. So what I would encourage everybody on this call and everyone that watches this thing to find your state representative as well as the chamber and light up that phone and email to them and let them know, because it does make a difference evidently, because it seems like that's what happened with Congress in December. And I think we're going to be sending something out later today, aren't we, Adam, on some of this stuff?
Yeah, our goal is to have something out by the end of the day with the written kind of recap.
Cool. Any other questions out there? Hit us up on the Q&A. And again, just as a reminder, if you guys check the chat, I put a couple links. Dan Bishop had his aide send me a bunch of links this morning, and I have to actually click on them and then copy and paste them. But these were two in particular that I thought were probably most beneficial. I wish they had a summary like what I tried to compile last night. I'll just read some of this stuff for why make it easy? But there were a number of news articles that I compiled this stuff from, but here's interesting numbers. So how much money is actually going to the $1,400 checks, where, by the way, if you are an individual, if you're $80,000 or 80,000 and beyond, sorry, you don't get any money. Same way with joint filers at 160,000. There is a $300 per week unemployment boost that goes till September. And I think through September, if I'm not mistaken, 360 billion state local aid, and you can see that in the allocation in the most recent link that I put in that chat. 170 billion to schools, 160 billion for vaccine testing and testing, 45 billion for low income support, 25 billion for restaurants, 25 billion for child care centers, 15 billion EDL, 14 billion eligible airlines, and 7.25 billion in expanded PPP. That's what I was able to amass, but there's more. And that first link that I sent, where it says the American Rescue Act summary link in the chat, that gets into it delineates some of that, but again, it's 16 pages, and I wish they could just like, hey, this is where it's all going, but I don't think they want people to know. So that's why they haven't done it.
All right, so I have a kind of the next best answer. March 3rd is the date. So what I've seen, and that's what I thought. But for loans applied for after March 3rd by independent contractors. So there's no retroactivity, at least at this point. But again, we've seen how things change if enough people complain about it. But I think that's an excellent point, is why should we get penalized because you guys didn't give us the benefit that we were looking for, or that was given to other people that were not self-employed, independent contractors, et cetera. So hopefully that will change, but to manage your expectations based on, again, on what other aspects of the correction were not retroactive. So cross your fingers, and if you're optimistic, then great, but I'm a little more on the pessimistic side on this issue.
Adam, any thoughts for whether they're clients of ours or just business owners out there, especially with regard to March 15, which is rocking and rolling. It's coming down the pike sooner because that rather than later, it's Monday. Anything that you would counsel anybody out there?
No, I mean, probably, I would re-hit, a couple of the really relevant points from my perspective on this new act is that, one, if you are a landlord and your tenant is not paying you, make sure that you are following through with the tenant to make sure that they're applying for a grant to pay the rent, and then you subsequently get paid. I mean, real world example, I had a guy that knows me that knew that a tenant was a client. I mean, this is on a commercial side. He's like, hey, what didn't some of the PPP funds get you? Aren't they supposed to be used to get paid back rent? Can you go talk to your client for me? Which I did. But, that was a case of the landlord, was proactive about, look, dude, I know you got some money, make sure I get paid. So I would think about that. And then, the second is, again, just, employee retention tax credit money. I mean, that's, that is I feel like an underutilized resource at this point that people need to be tapping into.
There's one topic that I want to go back to from months ago, which is fraud. And I was thinking about this morning when on the local news, they were talking about, well, make sure your banking information is updated, and because you may be getting electronic funds transfers in order to receive the funds. And so, of course, you have people that are dishonest that are going to pretend that they're the bank, and they're going to say, hey, by the way, we're required to one of two things. We're required to contact you prior to sending you the funds. So please click this link and reconfirm your information. And when you do that, they'll have some stuff that looks like personal information, but of course they're going to ask you for the bank account and all kinds of other stuff, which they don't have in their possession, which they would like for you to give to them. The other is they're taking advantage of processes that have been implemented by accounting firms, by law firms, and it varies, but the concept is prior to an electronic funds transfer, someone in your accounting group is supposed to contact the intended recipient and say, this is the information. First of all, verify who you are and that you are the intended recipient, and tell us the information, confirm the information that we have is accurate. And there's all kinds of stories as to how people have intercepted conversations and waited to the date of closing or loan funding and have diverted funds. And it's very difficult, in some cases impossible, to get that money back. So, and dishonest people know that. So they're going to take advantage of you and say, this is our process. And if you've dealt with any electronic wire transfers, you might say to yourself, yeah, okay, that makes sense. So just be up. And I don't know if they're still doing the debit cards in the mail, but I would be a little more vigilant. Don't have someone check your mail. Spring break is coming up for a lot of us. So, don't have someone check your mail and just grab it. Don't leave it in there, and things like that. Just, common sense things to reduce the chances of you being a victim of fraud.
Good stuff. Last call for any questions out there. Just a reminder too, while we're waiting, this broadcast, in case you came on late, will be put up on the BGW CPA YouTube channel this afternoon. Look for it probably mid-afternoon or so. Hearty thank you to Jack and Adam again. A hearty thank you to Dan Bishop for, picking up the phone and actually talking to me and sending us some important information and encouraging us to light up our local legislators. And Casey Crawford and the Movement Mortgage people, we really appreciate what you're doing in our community. And I appreciate what you did for me in my house, but more importantly for this community. Anything else? Last call. You got 30 seconds to hit that Q&A or I'm signing us off. Adam's probably got another business lunch.
Kind of.
All right.
Oh, by the way, for the people that I owe Starbucks cards to, those will go. One has gone out, the other has not yet, but it will. So I didn't forget. Actually, I did forget, and then I reminded myself, and then I forgot again, and now I'm reminding myself again. So
it was Richard and Cindy, if I remember.
It was, yes.
That's awesome. Both of them are BGW clients, which is really cool. So anyway, hey, everybody, thank you. Thank you again, Jack. And thank you again, Adam. We plan on being back here, same time, same bat channel next Thursday at 11 a.m. And you guys take care. If you need us in the meantime, don't miss out. Just hit us with FAQ@trustbgw.com. And that is especially regarding PPP stuff, or you can even hit me if you've got other stuff that you want to talk about at GFREY@trustbgw.com. You guys take care and have a wonderful day. Enjoy this beautiful sunshine.
Thank
Bye-bye.
you.
Thank you,
Bye.
Gary. Talk to you guys later.